limited.
I said amazing unless you use Hexite. Uh, okay, great. So what does supply chain planning look like in 2030?
I think it's a good question. I think I think the ability of AI to deal with unstructured data is going to improve. The ability for these new agents to develop applications and to actually deal with that proactively will improve. Will we see a full end-to-end thing? Imagine that you're now having a firm that runs $100 million in revenue, and you just like you don't have a supply chain person, you have a supply chain agent. I think we're probably a few years away from it, but definitely see that as a future where we have firms that are 10, 20, $50 million. And, I had a conversation with someone a few days ago. We will see more of these SMBs because primarily the big firms will not need people. So we'll see more and more people that run smaller firms and 20, 50, 100, maybe $200 million that will just be a one person, maybe a few creative people helping them build product, but they will have an accounting agent. They will have a supply chain agent. And I think the question is going to be who is going to create these. It's going to be how resilient these are, and I'm sure you'll be able to say, I want my agent to be more resilient. I want my agent to be more. But now you'll have better visibility into the implication. You will not be able to say, oh, I thought we have stockpiles. I mean, the other, you'll tell your agent to have stockpiles. The agent will tell you whether there are stockpiles. It will be less of that mismatch. But it is possible the next disaster is also going to be an AI agent supply chain disaster where someone is going to be thinking they're preparing for the right thing, but in fact they're preparing for the previous disaster.
Are we more likely to see there's really three cases here. Are we more likely to see large companies adopt AI widespread and sort of reduce their supply chain operation into an agent? Or are we more likely to see small businesses do that, even if their economies of scale are lower? Or are we more likely to see brand new companies that are starting today incorporate it into their DNA, and then we just see the natural business cycle play out?
Great question. It's the new firms that are redesigned from scratch. I'll give an example. If you look at, there is a big push in the US towards manufacturing, and these are firms that are primarily YC firms that are building primarily defense tech related manufacturing in the US. So you see, there is a Hadrian, there is Amka, there are a few of these. These are firms that are built AI first in their manufacturing, and I'm quite sure that their supply chain, even though it's in its infancy, will be AI first. Then I think it's a big question. I don't know. I'll give an example. Not supply chain, but Goldman Sachs had a huge deal now with Cognition on building agents. There are more agents probably now trying to help banks than trying to help small financial advisors. For product, I think it might be the other way around. I think we'll see probably again, like a $50 million person selling on Amazon, applying now an agent to help them run their Amazon supply chain better. When to ship things, when to order things. It is even possible that Amazon is going to offer these agents very, very soon to their own people. Currently, the agents within Amazon, as far as I know, are running only within Amazon. But Amazon has a history of always taking these things and then externalizing them. And so I think when it comes to big enterprise, it's going to be big then small. I think for product, I will not be surprised if it's actually the mid, not small, but mid 10 to 50, and then climb up.
And just to tie that up, like we see a really like a big talent gap when we go to visit customers, like, in the middle of nowhere a lot of times because that's where, things are being produced. How do you think that's this whole motion is really changing the workforce and addressing the talent gap that we see?
Yeah, I mean, I think supply chain has a huge talent gap because it's for many firms, it's not the supply chain professional that runs that. It's actually someone that came through the ropes, someone that now runs the supply chain. And the supply chain became more and more complex over time, and they in many ways exceeded their capabilities. That's why they're also reluctant a little bit to adopt AI many times because they really can't always follow what's going on. And so they like their Excel, they like their comfort, they like their plan. But I think that's kind of where going to be interesting opportunities. Primarily, by the way, it's going to be interesting that I think many of the roll-ups that private equity firms are doing, many of the search funds that are active now, a lot of that is about people that come from the beginning with the agenda of implementing AI in these firms. And so I think the fact that the talent is not there means that as long as these people are there, most likely AI might be slowly adopted. But once these people are not there, or once there is transformation within the firm, it's going to be one of the first places where you can actually adopt AI and drive meaningful improvements.
Yeah. Although really, who's going to use and manage and orchestrate this is also a question.
Right. But that's why I'm giving the example of the roll-ups, because many times these are people that come from that with the agenda of we are going to bring AI, we're going to try to bring improvement into that. So I agree, it's not going to come usually from the previous generation trying these firms. It will have to come from someone saying, there's an opportunity here. That's why I think these are the defense tech firms that are coming, and these are funded by A16Z and the like. Is the idea that we have enough manufacturing capabilities, or at least there are not enough for manufacturing capabilities, but they're lagging in terms of sophistication. They're married to legacy systems, which actually does not allow them really to move fast enough in adopting these technologies. We need to build things from scratch. I'm not sure that that's the only way to think about it. I think you can actually take something that exists and improve it significantly with AI, but it will require significant change of management.
Do you find that in these roll-ups, most of the PE firms are coming with a playbook, or call it like a subset of playbooks? Or are they agnostic as to what these AI investments are and relying on the firms to go out and seek what might be an optimal option, an optimal setup or composable environment, what have you?
Most of the roll-ups come with a playbook, right? Most of the roll-ups, and you see actually now that the ones that are more tech forward are the ones that come from General Catalyst and Thrive. Thrive, in fact, built a whole vehicle that is not VC backed, but VC based, more like private equity based, trying to do exactly that. And they have a very, very clear playbook, even though the details are still murky, but the leadership is usually very tech forward. There is an hypothesis or a thesis on what's the role of AI in that roll up, and then there is an attempt to implement it. It's different than more traditional PE roll ups that were much more about, okay, we're going to acquire all of these and we're going to create economies of scale through a better digital marketing, and these have been generally speaking, not very successful. They're not being successful because I think there was underappreciation for, and maybe that's still going to be true for the Thrive Catalyst ones. There is underappreciation for where the bottleneck is. The assumption was that if we're just going to consolidate, economies of scale is going to kick in. We'll be able to do better digital marketing because probably they didn't know what they're doing. We'll be able to be more efficient because they didn't know what they were doing. And these assumptions were usually debunked. And so then you still can lay off people and get some improvement, but these are not sustainable improvements. And that's why I think the valuation also over time weren't really meeting the expectations. But I think the new waves is definitely much more tech forward.
Say you have the ability, and pardon me, I just want to pull that thread a little longer. And let's say you do have something that can address volatility, and maybe does that open up the doors for a PE firm to make investment in something that may have been considered too risky prior, didn't have consistent growth, may have had growth all over the place, but if instead of addressing economies of scale and having that be the strategy, you're actually addressing working capital and volatility using probabilistic forecast or using experiment-driven planning. Do you see, or have you detected any kind of appetite for that? I mean, is that changing the PE acquisition markets?
Not PE yet, but I've seen definitely investors I spoke with, that's exactly what they try to do. Not private equity firms yet, but definitely firm founders and searchers that are looking for opportunities, exactly what you're talking about. I think the thesis has not yet emerged for the private equity. I think it's a little bit antithetical to how they think about things, but I think, private equity, if we've seen anything over the last 10 years, catch up very, very quickly with what's antithetical.
Yes. Sharp people.
Yes.
And they probably are downstream. You have the edge cases who are, the early movers on what they call it, people buying businesses that are where the owners are retiring right now, right? That's what's happening. You mentioned all these roll-ups. It could be a machine shop, just like you mentioned. Could be any of those types of companies. The PE firms are probably 5 to 10 years trailing with the early movers.
I would say probably.
And just on that note of having a playbook really to improve, I think it's a bit the same for consultancies. We see a really big shift in supply chain specifically, okay? And best practice specifically in supply chain, we saw all the big consultancies actually lead the best practices and do multi-million projects just on how to run a process. And now that everything's shifted and things are breaking and they're still implementing the best practice, would that also is that also right for consultancies? Do you see the change there as well? What change do they have to make in order to remain relevant?
I think they are in I won't say in trouble, but I think they probably have to make the biggest shift. And I'm saying that because many of them realize already that they have to be part of implementation, because just to get a deck that tells you that the issue is the fact that you have not invested enough in AI is not enough, right? And you click now on deep research on ChatGPT and you get probably what's equivalent to a fairly good project that in the past McKinsey will charge a $5 to $10 million on, and so But at this point, they're not equipped to do that yet, right? I mean, I think, and so I think that's what I see. Sort of like that's the thing that if I go back to Palantir, I think with Palantir, and you can see other firms like it's interesting that even OpenAI called their consultants, so to speak, for deployed engineers, because the reality is that what you need is people on the edges, so close to the customer, but also people that can actually are willing to deal with messy data, are willing to build things. And feed it into a bigger product. And this is just not something that's how the consultancy are thinking about. I mean, they used to come and say, you need to have that process. Here's the process. That process will solve it. Here's even an Excel spreadsheet. Maybe it will even help you a little bit with a SAP implementation of trying to tie it into your process. But it was really, they were really never closing the loop. They were always leaving the moment that, and AI is going to be, everything is going to be about closing the loop. If you don't close the loop, there is no ROI. If there's no ROI, you cannot show why I need to bring you back again. And there is really, and there's just like never the capability there. And so I think we'll see, it will be interesting to see how they're going to struggle with that. But I definitely, there is a reason, I look at the PwC, for example, announcing they're going to put $1 billion into Gen AI investment and training. What does that actually mean? Hard to say. But a big part of that is realization that they really need to retool everybody within the organization to deal with the new reality.
Are you hopeful that today's evolution in technology and supply chain technology specifically will solve the 1,000-year problem of supply chain management, leading to healthier companies?
I am. And the reason for that is that those who are not going to emerge with better tools will die. If we believe there will be more and more volatility, and if we believe that now this technology will be easier to implement for those who want and can, and there is a whole new generation of managers. I'll give an example, which is not from supply chain, but almost you see it in marketing. Marketing, the reason you see a significant investment in marketing in technology is that most CMOs now got their job because the previous CMO could not figure out mobile. And so they learned that if they don't understand what happens next, they will lose their job. Supply chain is not there, but the next supply chain managers will know that they did not adopt AI fast enough, and that's why they lost their job. And so I think we will see significant value destruction, but that's what we're talking about here. When there is a reason you need value to be destructed to be new value to be built on top of that. And so we'll see a whole different set of names in a few years that have very different supply chains and ready for the new reality. And those who are not will just, will be a little bit like the Codex of the past or the Jeep of the past, or, we can have, I want to say almost like the Intel of the past, but Intel is back in business these days.
So let's help them out. What's one misconception about AI and volatility that you wish that every current C-level executive understood?
That I think you have to build for a more resilient supply chain. And more resilient supply chain means end-to-end mapping, end-to-end understanding of volatility, end-to-end understanding of decisions, but more importantly, end-to-end understanding the leadership level, that there are tough choices we need to make, and we need to start making decisions now. So when the things happen, we're actually there to make the decision. But these things don't happen when the crisis happens. It happens here in advance, but they require making hard choices now before actually things happen.
Thank you very much. Very, very insightful and interesting conversation.
Thank you. Great to be here.
Thank you, Gadi.